Welcome to the Service to Syndication podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication podcast. Hello, my servicemen and servicewomen. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlowe. I am a U.S. Navy vet. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, investors, capital raisers in the world where most have donned the uniforms of our great country. We aim to provide the tool sets, the mindsets, and skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me Mr. Breck Baird, who is a commercial development architect. But before I properly introduce our exciting guest to you, I want to ask a favor of you. Please, if you get some value out of this interview, if you learn a new skill, new information, receive inspiration or motivation to go out and take some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, and share it in your stories. Help us spread our message while you help others. And for all of you who shared this episode, I want to say thank you. Again, everyone, I have with me Mr. Breck Baird. Breck brings a unique combination of architectural training and financial expertise to the commercial real estate industry. He is a licensed architect and MBA graduate of UC Berkeley's Haas School of Business, giving him a dual perspective on how buildings are designed, financed, and delivered. His development career spans multifamily, mixed use, and institutional projects across California, where he has managed entitlements, construction administration, asset management, and quantitative underwriting. His work includes overseeing large design and engineering teams, coordinating with contractors and public agencies, and evaluating acquisitions and dispositions through detailed financial modeling and market analysis. He has managed a 3,000 unit affordable housing portfolio, redevelopment efforts on 1 million square foot projects, and maintained key relationships with investors, lenders, and government stakeholders. With experience across architectural firms, startup developers, and established housing organizations, he is driven by a passion for shaping the built environment through smart, sustainable, and financially sound real estate development. First off, welcome, Breck.
Hey, Cedric, thanks for having me in for that wonderful introduction.
All right,
Happy to be
awesome.
here.
Thanks. So, Breck, before you became this very successful person I see in front of me, in about 2 to 3 minutes, give our listeners a little bit of your backstory, like where you grew up, how was your upbringing, what in your past shifted your mindset into becoming the person you are today.
Sure. Yeah, I grew up in outside of Salt Lake City, Utah, and I think the sort of natural environment there when I was in high school really got me into sort of sustainability and conservation of sort of the natural world. And then when I was in college, so I was active with sort of the environmental organization there as a hobby while I was studying actually computer engineering, and then wound up getting a minor in architectural studies. A lot of my friends in college just happened to have been architects, and I started getting interested in architecture then and began to see a way to combine sort of my side hobby interest of environmentalism with the built environment. It was sort of when the U.S. Green Building Council with their LEED certification was becoming more popular. And when I graduated, it was in the wake of the dot-com collapse, so there was not a lot of computer engineering jobs at the time. I decided to then shift my career and study architecture. Got my degree in architecture, went to work for an architecture firm, and got my license a few years later. Began thinking more about how buildings are financed. In particular, there was a project we were working on for a developer. It was going to be spec office building. And in California, the requirement was that the office buildings had to have the ability to add solar panels on the roof at some point in the future, if not during the construction process. And that was the original plan with that building. And then all of a sudden, the developer comes back and says, "Hey, we found money." I believe it was like through the CPACE program to finance the installation of the solar panels. And so there we are partway through construction documents, which is like the 11th hour before they start actually building the project, sort of revising the design a little bit to accommodate the installation of the solar panels during the initial construction. And that was one of those early projects that really sort of made me wonder how, I knew as an architect how buildings are assembled and put together designs for the end user, how the construction components come together, but not how the financing works, which is a huge part of how we get buildings built and renovated. So that was one of the sort of key moments when I was like, well, I got to go. And at the time, I was doing sort of informational interviews with other architects who moved into development, and common path for that was through the local UC Berkeley MBA program. That was what sort of ultimately led me to there. And then while I was going, and so I was doing the evening and weekends program at MBA at Berkeley, which was great because I could keep working full time and make the transition while I was in school instead of taking 2 years off to go to school full time. And so while I was there, I began working, like you mentioned, for an affordable housing developer in the Bay Area. First doing asset management, because as an architect, we finish the building gets constructed and we typically walk away and then don't really see how the building operates. And a lot of the finance, education was about looking at financial documents for companies that are operating. And so I wanted to see how these buildings that I was, had spent the previous 8 years of my life designing, how they operate and function financially. And so I did that for a couple of years. And then an opportunity came up to work on a redevelopment project of a local shopping mall that was a couple of miles from my house. It's a traditional, indoor shopping mall with your Sears and your Macy's anchors that had declines, in the 2000s and the 2010s, and it was looking to be revitalized, along with developing the very large parking field to add housing and office. And the developers had this grand scheme that I got carried away with, and so I joined and began working for them to help redevelop the shopping mall because it was kind of in my neighborhood. It would have been nice to have contributed to sort of revitalizing the area. COVID struck, and the project kind of unfortunately didn't wind up completing in the vision that the developers had at the time. But over the course of that 4-year period, they had acquired the because in shopping malls you have the mall itself that the developer owns. And then the anchors, the J.C. Penney's and the Sears, they own their own parcels. The developer will build it and then basically gift it to the department store as a way to entice them to come to the property and then draw the foot traffic, which then helps, provide customers to the small shops that the developer then collects the rent from. And so over that period of time, in part because of COVID and then just because of the sort of downward trend of shopping malls, those anchor buildings were going dark. So like Sears decided to close that location, which gave the developer the opportunity to come in and purchase back those anchor parcels and assemble the site into a single property again. So where you used to have 4 or 5 different owners for each for the mall itself, and then the anchor buildings, and then there's a reciprocal easement agreement that limits how the different parties can develop the property. For example, there was a deal with a hotel that wanted to come and build on the property, but because Macy's had the ability to say no and not allow that development, like that was just sort of on hold until we could negotiate with Macy's, or as what happened, Macy's decided to close that location. Our firm was able to acquire it and ultimately assemble all 77 acres into a single ownership again, which made it a huge piece of land under one ownership, and that is where they were able to add a lot of value in sort of that assembling the parcel. And unfortunately, because of COVID and sort of it made operating an indoor mall difficult with all of the social distancing and whatnot.
Right.
So my firm then sold the property to Prologis, which is now working in the process, negotiating with the city, and they're developing a large master plan to redevelop that into a more mixed use housing retail community, as opposed to just that sort of monolithic shopping mall with a giant parking field.
Yeah. You know, so around 2020, you're saying that the developer had this grand idea to do shopping mall, this type of shopping mall. I find it really interesting that they would think even in 2020 that a shopping mall would work. Like even at that point, things were even before COVID, shopping malls were on the way out. Like you said, Sears had folded years before. J.C. Penney's started closing a lot of their stores. And so those major anchor tenants that everyone used to have started just closing down and rethinking their business model. But I guess they had some great vision to how it was going to work for them.
Yeah, well, that that is sort of an interesting case study in how so that they acquired the property 2017
Okay.
with the initial plan, bringing in new tenants and just doing a revitalization and getting it back to sort of a Class A shopping center.
Oh, okay. Got it.
Population is growing and there are positive demographics for the area. But over time, like things slowly started shifting. Like almost shortly after they acquired the property, J.C. Penney decided to go dark. And so now they had the opportunity to buy this department store, but then figure out how to incorporate that into their plan. And so there was everything from carving it up into sort of like an outlet mall,
Mm-hmm.
turning it into office space, making it the parking garage since there was a plan to redevelop the parking. And then Sears, like you said, went out of business, and then Macy's and then COVID. And so they had to sort of on their feet readjust their strategy to how they were going to add value.
Mm-hmm.
And so it went from redeveloping it and revitalizing it to ultimately having reassembled the parcel into a single ownership, which then made it valuable for other developers to come in and look at sort of completely reimagining it. And, ultimately the mall will probably someday come down and be replaced with housing that is desperately needed, more
Mm-hmm.
local, walkable neighborhood retail.
Okay. No, thank you for that explanation because in my eyes, and of course, I don't really do the development thing, and of course, definitely not shopping malls. So, I see, these names out here, Simon Store, you name the names. They build these malls, shopping malls, outlet malls, whatever you want to call it. I didn't realize that say Macy's, for instance, if they had a store, they actually owned that parcel. That's pretty unique. I mean, I just assumed Simon or whoever built it owned the whole thing, and then Macy's leased space within that shopping mall.
Yeah, as I was new to retail as well. Like I mentioned, my architecture work was all more in corporate institutional projects, healthcare, civic buildings, office buildings. Um, so yeah, that was a big thing I learned when coming and into the retail side, that it is originally the developer, buying the entire site, developing it, but then at least, historically the model had been using those buildings. So effectively, Macy's and Sears has no rent. They pay to help, do the cover the common area maintenance costs, but
Mm.
they effectively get the lands for free as their incentive to come to the property. Whether or not we see malls continue to get built in the future with that model, I think is a big question mark at this point, because, as you mentioned, back in the 2010s, yeah, there was a lot of talk of the retail apocalypse, and we were overbuilt in retail. But over the past few years and since COVID, retail as a sector has actually performed quite well. It's very consistent. It didn't have that large spike that we saw in sort of industrial property.
Hmm.
The demand for warehouses as
Yeah.
everybody stayed home and had to start ordering online. And so through all that time, retail has actually maintained quite, pretty good consistent.
Yeah.
We're
Yeah.
now.
Yeah. Yeah. It definitely bounced back a lot more than what I thought it would. But, hey, people still like going to the mall. As I always say, see it, feel it, and touch it. People like that experience where, you shop it online. Yes, you can see it, but you can't feel it, touch it, try it on, and all these things. And takes time. It comes in the mail and it doesn't fit. Now you got to send it back and order the next size, wait for that. So yeah, retail still has a great place for the consumer. Yeah.
Yeah, and it also, I think, creates what's known as the third space. So you have your home, your work environment, but then a space where you can socialize outside of, work or home, where you can see your friends. Maybe there's a bar, or hanging out at the mall. And yeah, I feel like that's something that we lost for a few years during the pandemic, was that having that social connection. So there's always that, I think, renewed appreciation of having a space to come and interact. And that's something that is sort of a component to the retail aspect, is creating that sort of placemaking,
Right.
where you have that sort of crossover between public and private space. So, where an office building is private to just the tenants who are working there, and the home is obviously, just for, individuals and families. In that retail sphere, you have the crossover between, the private stores, but also a place where the community can come together and be able to interact in a way that's not just, private family time, or it's outside of work. So you get that sort of social element.
Absolutely. So, Breck, as I mentioned, you began your career as a licensed architect and later transitioned into project and financial management. What motivated that transition, and how did that architectural inform your approach to development and finance?
Yeah, well, so in architecture school, there's a lot of talk about how, the architect's, the master designer, and has, like that very sort of high-minded academic idea of being able to design and create whatever you want. And then sort of in the background, some of the practice management professors will be talking about, oh, you have to be, aware that it's the client's decisions, and you're designing what they want, which gets glossed over a little bit in school. But then, yeah, once we're working professionally, it becomes much more apparent.
Mm.
And over the years in architecture, I kept seeing situations in which, clients were making decisions that didn't make sense to me as a design professional.
Okay.
because maybe they were driven more for financial reasons or other internal political issues. And so over time, I saw more of these cases where decisions were being made that I thought, oh, as an architect, I could help make a better informed decision. And some of
Mhm.
them even had large financial consequences. When I was working for Smith Group, we were doing a major rehabilitation of a building in downtown San Francisco that was being converted from like a financial back office processing center into a school of dentistry, so a graduate school for medical students to become dentists. And when the school had originally gone out with their brokers and their contractors and were looking at properties and pricing the cost of construction, the contractor that was sort of providing that expertise on how much it was going to cost didn't necessarily have the specific knowledge about codes related to medical schools and had undersized the HVAC equipment, had sort of
Mhm.
released it as if it was going to be an office building and had requirements for air handling units that were sized for an office, not a medical facility. And then so once we came on board as the architect, we're looking at, we're like, this it's going to require, us as the architect and our engineers that were the MEP engineers helping us, very quickly saw, oh, this is going to have to be a much larger system than what was sort of spec'd in the original plan, which meant the university then had to go back to their alumni and do more fundraising because it's tens of millions of dollars to do this remodel. And so that was one of those early examples of like, oh, if the architect was in the room or the architect's, MEP consultants, we could have added value there to at least right size the amount of money that the university would have had to raise on their first fundraising campaign.
Mhm.
And so it was examples like that where I'm seeing like architecture and to a way professionally that the practice is traditionally structured in such a way where we don't come in until later in the process when it's schematic designs and thinking about what the building is actually going to look like and less often in the sort of planning and acquisition phase. And so that was one of my concepts of as an architect, I could provide value earlier on in the process. But without, as an architect, there's very little education about how buildings are actually financed.
Mhm.
And in fact, when I was starting to think about the transition, I happened to be, at my annual physical and chatting, making small talk with my doctor, and he's like, "Oh yeah, that's a lot like in medical school. They teach us very little about how, hospitals and medicine is financed because it's all about it's the professional focus. For them, it's about healing, and for architects, it's about designing and not how we actually fund that. But it turns out, that's a huge component of getting things built. It's not just the design; it's designing the finances and the capital stack. And so as I was, going and learning the financial side in business school, I sort of realized that as an architect, we have to put together construction documents that go and get reviewed by, the planning department, and they go to the fire marshal and they go to the contractor and the subcontractor. So there's lots of people with lots of different backgrounds and understanding, and we have to make this very complex, set of construction documents understandable to different stakeholders in the process. And that sort of ability to communicate complex ideas to different types of people, I realized what was sort of a skill that was transferable into the financial side, where we're putting together spreadsheets and pro formas, financial documents that need to be sort of drawn, if you will, in a way that's legible and understandable from, investors, from banks, from, different people in different backgrounds, and presenting this complex notion of how the building will operate financially in a clean format that's easy to read and understand. And in business school, they teach us about how, just the formatting and layout of a spreadsheet, how sort of the Wall Street finance world sort of uses different colors and fonts to identify different types of information, like what's an input, what's a calculation that the spreadsheet is doing, what's information you're pulling in from some outside resource. And so just sort of like visually making it easy to read and understand.
Hmm.
And one nice compliment that my boss said as she was presenting the pro forma to the bank was that these were some of the nicest, like easiest to understand pro formas that they had seen. Because I was coming in with this like idea of how do you make it like visual, like so you could read it like you would read, an article in a magazine or a novel. But like
Right.
as architects, we have to make these complex construction documents legible, and we spend a lot of time studying line weights and what different patterns of dashes and dots mean.
Hmm.
It sort of translates to like how do you make a clean presentation of the financial information.
Okay. So for my listeners who are unfamiliar with the intersection of design and real estate, what skills translate surprisingly well between architecture and development, and what skills need to be learned from the ground up?
Well, like I mentioned, architects really see the financial side as a black box, where the money comes from, what's the difference between, debt and equity, what, even your equity shareholders, you might, if you're working with, a family office or high net worth individuals, they'd be looking for a faster, sooner return than
Hmm.
if you're working with a pension fund that has liabilities to pay, the pensions for decades into the future, they maybe are happier with smaller, lower percentage returns, but more consistent and long term. Whereas a high net worth individual might just want that early quick return to get out of the project in a few years. So the whole finance side is unfortunately something that I think architects and engineers and contractors could benefit from learning at least a little bit about in school. I think as a designer and having that ability to sort of look at a set of plans and visualize it in three-dimensional space, or walking a space and being able to sort of in my mind see the overall layout has been beneficial. As an example, one of my classmates from business school who has a background in construction has gone out and started buying apartment buildings and renovating existing apartment buildings, and then looking for friends and family money. I had the opportunity to invest in his projects, and that gave me sort of the in as being part of the his syndicate gave me the opportunity to then sort of in my spare time look at what he was doing and provide a little bit of advice. And his plan was for this one particular project to convert, some of the one and two bedroom, one bedrooms into two bedrooms, studios into one bedrooms, and then just sort of upgrade some of the one bedrooms into just nicer one bedroom. But through his little investor updates, I'm looking at the floor plans and the space, and I with my architecture background and able to sort of advise how all of the one bedrooms could be converted to two bedrooms, effectively increase the NOI of the property because now there's more
Yep.
two-bedroom units, which was a nice sort of way that reinforced my initial concept that, oh, as an architect coming in sooner, I'd be able to improve the outcome of the project. Flip side of that is that he had purchased that building sort of prior to the spike in interest rates that came after.
Yes,
Well,
yes.
then I got to experience the downside of being an investor and having to contribute to a capital call. And fortunately, the project is still going, but the returns might not be as strong as initially projected.
Lucky for you that the project is still going even after the capital call. I'm in a project right now, and it's not looking good for any of us. But
It's
those are the risks we take. Unfortunately, not happy about it by no stretch. But I'm not
yeah.
going to stress myself out over it either. So.
Right. And that is, I mean, that's a whole side to the business that as architects, we collect our fee. We're basically selling our time to as specialized consultants, and
Mhm.
whether the project makes money or not, we collect our professional fee, and then don't see the upside if our expertise as architects helps improve the outcome of the project. One example, sort of on the institutional side, we were doing an office building for a large, well-known tech company, and their design requirements was that they wanted like 2,000 workstations in this new building. And my predecessor on the project had gotten the seat count up to about 1,800. And the client was like, well, yeah, it's close enough. That's fine. And then I came onto the project with a fresh set of eyes and looked at sort of rearranging how some of those workstations were laid out, was
Mhm.
able to actually increase the seat count to 2,200. So going from 10% below their target to 10% above. And certainly the client was happy, but not in such a way that like obviously adding 400 seats somehow impacts the bottom line. But how it does, as an architect, I had no idea. We don't get any special bonus or anything for bringing that extra value to the client. And that was again one of those examples where I'm like, well, if I had financial stake in the project, then yes, my knowledge would actually help improve my outcome, my
Right.
financial outcome. But then obviously having equity, you know, subjects us to forces well outside our control in the case of interest rates, which can have a negative impact. And so
Yeah.
that's a big difference between being on the design construction side and being on the owner equity side.
Okay. All right. So you've been involved in development from entitlements through construction administration. Can you walk us through what the development life cycle actually looks like and where the major risks typically lie?
Yeah, well, so in the beginning, there's the entitlement phase, and that early on can sort of make or break a project if you wind up getting opposition from local stakeholders. Being in California, it's a very democratic process, and your neighbors can come in and show up to the planning meetings and protest and use the sort of environmental CEQA Act to block progress of a project, saying that it doesn't meet certain environmental criteria.
Mhm.
And there's, I think, a lot of interest right now in Sacramento to try and change some of those laws to make it a little more, yeah, a little easier to get through the planning process, considering, particularly in housing, far short of where we should be in terms of housing production. And recently there was a group that was trying to develop sort of a new city out in Solano County, which is about 45 minutes outside of San Francisco. And they also ran into a lot of opposition from the locals. And so they're having to rework their plan to be more cooperative with the local existing cities. One of my professors in business school had purchased lots of farmlands back in the day, and I think spent well over a decade just working through entitlements, negotiating with local landowners to be able to convert that from farmland, agricultural, into single family residential. So the entitlements can be very risky and also drive up costs. When we were redeveloping the Hilltop Mall, we were talking to the local the water utility, water sewer utility, and then there was the need for a lot of upgrades to
To the
the
infrastructure, right?
yeah. And so they were looking to us and ultimately our tenants who are coming in to help finance the cost of upgrading the infrastructure, which
Mhm.
one of the who would have been the tenant had the Hilltop Mall project redevelopment gone through was like a banquet style restaurant. So they, a restaurant designed to host large, weddings and big functions. And uh, because of that higher demand compared to a more traditional retail store, yeah, the sewer utility was insisting on upgrading the utilities, which added a lot in cost in terms of the how much that banquet hall was going to cost to develop, which would have been an issue, but for COVID kind of coming along, ending the whole project. So yeah, so that entitlement phase can bring up a lot of unexpected costs, which if suddenly you have to spend an extra 600,000 to help install new sewers, can really make or break a project.
So, along that line, from your experience working with design teams, contractors, and city agencies, what makes a development project run smoothly versus totally fall apart?
Well, I think a lot of, I mean, particularly in California, a lot of community outreach and engagement. For a brief period of time, I was working for a for-profit housing developer that was trying to renovate an office building in San Francisco and turning it into housing. And they spent a lot of time doing outreach to the neighboring buildings. And when it came time to go before the planning commission and present, in the planning meeting to get approval, they had sort of a long line of people coming and speaking in support of the project. There were a few neighbors that were opposed to it and, talking about the typical things that people complain about, the increase in traffic and parking. But because they had done the outreach to both the local supervisors as well as other residents and building owners in the neighborhood, they had, developed a lot of support in favor of that project and were able to get it passed through the city planning.
Okay. Well, wow. Time has flown, and we could continue to talk about this because I'm really intrigued about the architectural development side because eventually in my real estate career, I want to get into development. And but again, time has flown. But before I let you get out of here, how do you see the future of real estate development evolving, especially as sustainability, policy, and technology continue to influence the built environment?
Yeah, that's excellent question. A lot of what I did early on in my career with the U.S. Green Building Council and the Sustainable Lead certification, some of that has influenced policy, and so in California, cities are allowed to adopt certain sort of green, sustainable requirements. Like I had mentioned, the need for adding solar panels or making buildings solar panel ready, so that at least someday they could receive that, and relying more on renewable energy. I feel like being in California, have the advantage of seeing buildings that think about that and become test cases for how to incorporate either solar or wind power into the design of the actual building. So lowering demand on the local utility grid, which as we see, the rise of AI and more energy requirements from data centers, that's becoming a big question is how do we provide power to these data centers that are very, high consumption of energy, but still, without driving up energy prices for local consumers, for residents. And that use of on-site renewables, I think, is a great way to help offset the demands for the local utilities. It's just a matter of making sure that there's incentives from the government to help finance the adding battery storage on site or more rooftop solar for small scale buildings.
Wow, that's great. Well, technology, like you said, especially with the oncoming of AI and these data centers, yeah, that's definitely gonna impact the grid a lot, for that use of energy. And so, yeah, I can see how, and I've seen it actually, a lot of solar, I don't know what you call them, solar fields, solar plants or whatever, sits right outside a lot of those data centers because of just how much energy that those data centers take from the
Yeah.
grid, and that's crazy, but it's growing big time. Yeah.
Oh, yeah. Yeah.
Yeah.
Yeah. Our energy requirements are only increasing. So I think it's going to be a big challenge in the upcoming years and decades ahead.
Yeah, and you know what? And to add to that one, especially I think it's Mercedes that said in by 2030, which is just a few years from now,
Order. Yeah.
that all of their cars are going to be electric. So imagine that, a whole corporation that builds cars, every one of their cars will be electric. So then that's definitely going to pull on every grid that there is out there in this country and around the world. And so you have to have those type of sustainable electrical fields that are out there to be able to provide the energy for that.
Oh, absolutely. Yeah.
Yeah. Well, Breck, it has been a blast having you as our guest today. And as we close out, please tell our listeners where we can learn more about you, get in touch with you, and learn about all the fabulous things you have going on right now.
Well, I mean, I think probably the easiest, most active social media site that I use is LinkedIn. So that's probably the easiest way to find me at Breck Baird. There aren't too many Brecks in the world. Yeah. So yeah, if anybody wants to reach out, they're more than welcome to connect with me on LinkedIn.
Awesome, Breck. Again, I want to thank you for your time today and all the wisdom you have provided to my listeners. It's greatly appreciated. And I want to thank you, our fans, for tuning into the Syndication Real Estate Podcast, where we want to add value to you in your investing business. Please tune into our next episode where we will interview another fantastic real estate professional. See you next time.
Thanks for listening to the Service to Syndication podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.